Happy Super Bowl Sunday to those who celebrate. Should be a very eventful week ahead. We have CPI on Wednesday, PPI on Thursday, and various large cap earnings. So a lot to look forward to, including this interesting chart setup on the S&P 500, along with all of these puts that we saw between Thursday and Friday of last week. This is starting to get pretty interesting, and we could see a potential trend move from this area over here. And if you know anything about the strength of a potential trend move, it all starts in the consolidation beforehand, and we've seen a lot of that. We've seen consolidation all the way since December 4th when it started back here. We had a mini consolidative period around here where we had this range, broke down, and then it formed an even larger consolidation formation. Then we broke back above, and really we've just been stuck between roughly 610 all the way down to 580, which I realize is a large range. It's 30 points. However, that's pretty stagnant considering, look at how much the S&P 500 rose just last year alone with all of this upside. So we haven't really seen much of that to start off the year of 2025, but as we can see over here, looks like there is potential for some movement. First of all, I want to bring your attention to 608.46. If this level breaks decisively, we will see an upside trend. We'll see it continue a lot higher. I have a target of 615 and then 623. All contingent on this level breaking. It is yet to break. We can see numerous rejections of recent over here, a little bit of a fake out and then back down. Over here would be the second one. And then the third one happened on Friday, paired with all of these puts. You can see over here, this came on February 7th. So that was Friday. We saw 1.1 million, 1.1 million, 1.1 million all in a row over here for out the money strikes. Also pretty short dated, all things considered. These do expire on February 18th. So about a week and a half from when they were executed. And then another 1.2 million, another 1.2 million over there, all for the same strike and expiration, all of them above the ask as well. So super unusual to see these puts hit the tape. It's possible this is hedging ahead of those events such as CPI and PPI, like I mentioned earlier in this video, but these are just prints we haven't really seen in a long time. So it's definitely key to be mindful of prints like those. Now, if I scroll down a little bit more, you can see it still was overwhelmingly put heavy throughout Thursday and Friday. Again, something we haven't seen as of recently. Some other notable ones, 1.5 million for the 545 strike. This is very likely a hedge just because it's super far out the money, but there is some time to it as well. Expires on April 30th of 2025. 1.2 million print over here also for that 545. So there's a lot of premium going into these orders, super far out the money for both of these. So incredibly uncommon to see that. And also these were opening orders. You can see the volume of these prints, the size under the size tab here on OrderFlow is over the existing open interest. And these came in at or above the ask. So they were opening orders, definitely some type of aggression, whether hedge or not. These people are being, at the very least, careful around this range. And the likely culprit beyond just CPI and PPI this upcoming week is this pattern over here. Look at this. We had upside followed by this red candle and then a major gap down over the weekend. And then we saw upside again all the way here until this rejection candle and then another gap down of similar stature over the weekend. And then we had the same thing over here, the walk up, and then we had this rejection candle. And tomorrow will be the deciding factor if this wants to do a triple cap down following a weekend. So we'll find out soon based on the future session. Now, in my opinion here, just based on the put flow that we saw, some of this is due to what we've seen now for the past 3 weeks with all of this either upside and drop down or just the weekend gap down by itself. So they're definitely hedging in some regard for that potential because of this similarity of pattern. Personally, how I'm going to trade this, I'm going to be very reactive to Monday. If we do not see a gap down like that, you need to be very careful of this squeezing in the opposite direction because, again, it seems like just based on the trend, there should be another gap down, maybe down to 590.50. My pivot over here, which acted as a nice support on Monday of last week. But if we don't see something like that, if we see it open flat or even gap up for that matter, this is something that can really rip in a quick fashion just because we did not see the same thing we saw the past 2 weeks with that gap down. All of these guys, either hedging or with their directional bets, are going to have to cover their position. And we're going to see potential short squeeze all the way up to my 608.46 level, which of course, if we break that, then that's where we really start to see the trend. So don't keep it hard set that we've seen now 2 gap downs over a weekend with the exact same setup. It doesn't mean that it has to happen over here over this weekend. We haven't seen any crazy news just yet, but the best trade for Monday and Tuesday Tuesday of this week is going to be the reactive trade to how we open. If it's a gap down, then we can look for longs around that 590.50 pivot. If we see that gap up, I'm looking for a quick trade to enter within the first hour of the day because we can really see this squeeze to the upside with all of those hedges rolling off, and just the fact that it's not following the pattern that it's followed thus far for the past 2 or so weeks. So the ball is in the bears' court because we have the same setup here, because we have all of these puts. But if they're unable to capitalize over the weekend, you definitely got to be careful there. Look for potential long setup because it'll go in the other direction in a very quick fashion if bears are unable to capitalize. So that's my plan on the S&P 500. We also saw quite a bit of dark pool premium coming in last week, as you can see here on the right hand of my screen. And then we can go to the dark pool levels to get a sense overall where the key levels from last week were. As you can see, 1.3 billion at the 606.41 level. So nothing too crazy there, but a decent amount. 1 billion over here plus this 600 billion. So roughly 1.6 billion between this cent difference, 604.17. And then as we scroll down, another 1.3 billion at 602.07. And then scrolling down from there, really wasn't anything that much crazy until we got to 1.5 billion over here at the 597.50. All things considered, this is a very light week in terms of dark pool premium. If you've seen our previous videos from the past couple of weeks, especially going into end of year and beginning of year, we saw a lot more premium. So this is pretty muted, all things considered. So I really don't see anything of edge just from this tab over here. The one other thing I do want to mention, though, and it doesn't even relate to the S&P 500, is AMD, because we saw a ridiculous amount of call leaps hit the tape on Friday. You can see over here, all of these were a little bit in the money for that 100 strike, and they had millions upon millions worth of these call leap orders, a bunch of sweepers hitting the tape. These were opening orders because, again, the size of these orders and the size tab here is over the existing open interest. So they were executing these to open, and they were for the March 20th of 2026 expiration. So just a little bit over a year. That's why they are considered leaps in this case. And that's pretty interesting to me because the semiconductor industry has been hit pretty hard as of recent. If we go to SMH, for example, and I'll just get rid of some of these moving averages here, but we can see that we pretty much have been consolidating as of recently. We saw a major gap down over here from that news from DeepSeek, if you remember that, from over that weekend, and we've just been consolidating ever since. But what's critical for SMH and just for any semiconductor ETF for that matter is to see a breakout back above its downtrend. This is a very critical downtrend, guys. If we're below it, then you're looking in more chop/bearish category. If we can get above it, which it's been unable to do, it's only projected ever since the DeepSeek news. But if we can get above it, there could be a trend move to fill this gap from that DeepSeek news, which would be a very strong move. And of course, in order to do that, it needs help from both NVIDIA and AMD because those are the major holdings there, along with TSM, etc. But over here, AMD looks pretty weak from a chart perspective. As we can see, it's just been falling quite a bit ever since it broke down below this roughly 121, 120 level, which is why those calls piqued my interest so much, because the amount of premium we saw is just unparalleled to anything we've seen as of recent for AMD. This isn't NVIDIA we're talking about, where we typically see millions upon millions worth of premium. This is AMD, and it's been super weak as of recently, but someone's clearly interested there with all of that call activity. So I definitely was interested in looking at it this weekend. And personally, if we go to just the 15-minute chart over here, I don't really see it that much that would provide a lot of alpha on this, so to speak. The best level that I can give on this, and personally it'd be 2 levels, so I'd have to make it a demand/supply zone, would be over here, 114.50, because of what we saw over here from this support, and then it finally broke below. And then the other level roughly would be around here at 113. So we can make that what would be now a supply zone. So just draw that out over here with this rectangle tool, but pretty much between here is where the supply zone is. You could even extrapolate that a little bit further to where this rejection site was over here. But for all intents and purposes, it is between 113 and 114.50, so about $1.50 in between. And we need to get back above this for this to have any hope at more upside. Personally, I would not be looking to buy the dip under this range over here. If we can get above, then that's a different story, and I can use both this range as an entry point as well as risk. So, for example, if for whatever reason CPI comes in pretty cool this week and we see good upside on semiconductors and maybe it goes up into Wednesday like this and we open up above, gap up to like 115, there's a possible entry over here for a little bit further dated calls, like maybe April to May and then June at the latest, calls up here with risk as an hourly close close back under this 113 level. So if we were to close back under, that would cancel it out, and then I would exit that position for about a $2 loss. But then if it's able to stay above and maybe retests it and continues, then this is something that can go for quite a while, evident based on the flow that we've seen as of recent, as well as a potential for semiconductors to go higher. And I'll go back to SMH to just show you really quickly. But of course, if AMD was above its supply zone over here, then that would be very bullish for SMH. And we can see that upside move because, again, if we do see this cross back above this downtrend over here, then we can see an upside to, at the very least, fill this gap from the DeepSeek news, which would be a very nice upside move and bring everything along with it, which of course I'd like to benefit by holding AMD if that's the case. But first, AMD needs to get up to around 114.50, 115. If that's the case, I could add that position. Otherwise, I'm not trying to add this dip. This can fall a lot more, could fall all the way to 100 and maybe even sub 100 in the meantime. So not trying to add a dip that'll keep dipping, waiting for it to fit my criteria. And then that's where I enter. And that's the beauty of options order flow. Just because these guys added over here at the spot price of 108 doesn't mean that I have to add at 108 as well. I can wait for it to fit my criteria. There's plenty of time on these contracts. They bought leaps, remember? So they have plenty of time. They're bullish on the further dated performance of AMD. And I can wait for it to fit my own criteria. Once it does, then I can join alongside them for maybe a little bit shorter dated contracts. And that just goes to show you don't have to blindly follow what somebody else is doing. Fit your own setup along with it, and then potentially hop in. Regardless, as always, appreciate you guys watching this video. I'll see you next time.